Hi everyone, welcome to another episode of Market Update featuring by Market Soul and Rationale. Lately the market is like pretty choppy. It's so difficult to the direction is definitely uncertain, and like in this kind of uncertain environment it's really difficult to manage our portfolios. So today I'll try to tell you some latest developments, what's going on in the market, from forex perspective, from indices, throughout all instruments, and then I'll show you some charts as usual. So before getting to first of all, we're gonna do we're gonna go through the economic calendar, what's happening, what happened last week, and what are the impacts of those developments on pricings. Then we'll move to some charts that might be used as a potential trade opportunity, or I'll show you some instruments that might be helpful for you to use them as an indicator for the current situation of market. So let's start with the economic calendar. First of all, from since our last video was published on last Wednesday, since then, first of all, we received UK CPI number. As you can see here, the forecast was 3%, but it came a little bit lower than the actual one. So the current environment in UK is UK is the first country that, if you compare to its peers, the stagflation risks were seemed to be the highest in UK. So that's why inflation number was pretty important, and seeing lower than the expectation and lower than the previous figure is pretty important. Quickly, let me show you its impact on GBP USD on the day. So it was on Wednesday. As you can see, this upward movements stopped after the CPI number came in, and we saw a correction from there after the data. Then on Tuesday, I guess, here you can see, sorry, on Friday we received UK GDP number, which is slightly higher than the expectation, which is also okay. They don't have to rush. Both data, both CPI number and GDP number suggested that the stagflation risks are getting down. So what was the impact on GBP USD? Let me show you quickly. So after the data of CPI data on Wednesday, we saw a sell-off. Then on Friday we saw a correction. As you can see here, there's a tight flag is being formed. It might act as both a bullish continuation, or might act as bearish reversal. So when you go to the 4-hour charts, this might also be used as potential trade plan. If it breaks down, you can put your stop around here and being short around here. That might be an option, or vice versa situation. So let me go back to economic calendar quickly. Then we received US durable good numbers. So the ACWI last week saw a huge sell-off. When you check here, on the daily basis, as you can see, we received the durable goods number on Wednesday. This was the day. It came. The durable goods number, the forecast was -1.1, okay, but the previous number 3.3%, and the actual number is 0.9%. It came pretty lower than expectation. So this means that these kind of data is signaling that the economic growth is under some pressure. That means rate cuts might be faster than expected, and with that activity we saw a huge sell-off in dollar index. As the rates comes down, the beauty of the XY or USD will be depreciate. So in that situation, we saw huge sell-off over there. And after that, for sure, the main highlight of last week was like auto tariff announcement made by like 25% automobile tariffs will be applied on imports announcement. And with the tariffs like news coming up, that will mean like the trade between US and like other countries gonna be like a lower, and that would decrease the demand for USD for sure. I mean, that's one perspective. One other perspective is, since tariffs would put like a more pressure on prices, there will be an inflation, and we see the huge impact that mentality on US 10-year yields were going up. I mean the 10-year yields have been going up since the Donald Trump got elected. That means that inflation expectations going high. With that expectations going high, the rates will be like higher than expected, and there will be like more like the dollar index will appreciate. So this two mentality is kind of like a fighting. We'll see which idea will be more like perceived by the market, and we will see which will be impactful on the prices. So then on Friday, last Friday, UK GDP, as I mentioned, then we received another highlight of the week was the PC number. First of all, Michigan consumer sentiment came like the previous number, as you can see, is 64.7, and the actual number is 57, which is like it's a huge decline, and that's also another soft data suggesting that economic growth is under pressure. Remember, like current situation is there's always uncertainty coming from tariff side, plus we are evaluating economic growth related data if we see any sign of recessionary risks. And the data is separated into two. First of all, like a soft data and hard data. For example, hard data is the non-farm payroll data that we are going to receive on this Friday, which is, I don't know, it's like a 5th of April, I guess. Let me see. My bad, 4th of April. So we're gonna see if any risk is there, like on the hard data as well. So consumer sentiment data is like a more like softer data, is suggesting there are some risks. Then we receive like a PC number, which, I mean, it's the data came slightly higher than they expected and slightly higher than the previous number. That's okay, but I think the most important side of the data, so the personal income was increasing, but while the personal income was increasing, personal spending was coming down. That might be a concern on that might put another pressure on economic growth as we see more decline in personal spendings. So yeah, I think that was the most like important part of PC number. And also after the PC number, the inflation, like the stagflation risks has, like, I mean, stagflation risks, yeah, have increased since last week. That's why we saw a huge flow from risk on instruments to risk off instruments, and gold broke another record, and we see like huge sell-off in indices that we're gonna go through a little bit later. Then we saw that like some like a flow from more risk off currencies from risk on side, and with the like inflation concerns, we saw some movements in oil prices. But yeah, last week was like the major, to just wrap up, automobile tariffs was one of the highlight, PC numbers was the second highlight, and the impact of these onto indices was the major impact that we saw on pricings. There was a huge sell-off on US equities since the beginning of the year. It has been, I think, the correction from the top is almost like a little bit higher than 10%. And yeah, let's quickly jump to the chart section. First of all country world index ETF. What does that mean? This is my indicator to follow in general, like all equities situation, all indices. That's a good indicator for me. There's a, I think, rectangle chart pattern is formed. First touch, second touch, third, fourth, a little bit pushing higher, then coming down. I mean, currently, without looking, without checking any like I don't know, RSI divergence or something, or moving averages, we can say that this seems like more like a bearish compared to like on bullish side. But and when you go to like the moving averages, when you check the moving averages, also you can see that the price is below 200-day moving average. So I would be definitely cautious on being long. So in terms of portfolio structuring, for sure, like it depends on your like mentality. But if you're doing just like portfolio rather than trading, I think like still it's time to sit and wait with cash, with or fixed income instruments, in order to be able to more aggressive when we see a rally, which might be probable, maybe like in the like a second term of the year, as we see that like because the aggression and the uncertainty that was the uncertainty going around the market right now due to this tariff issues and like geopolitical concerns. I mean, the government is taking really quick actions, and the impact, for sure, the uncertainty is something that market does not like. So after some point, like after a point, probably this will be settled down, and at that point, the base scenario of soft landing will be much more influential in pricing, which will rate cuts will come to the I mean that rate cuts will be the major focus again at some point. And yeah, just to be prepared at that time. But if you're trading, this might be, I mean, a potential breakdown might be used as a short opportunity. I mean, yeah, this is all country world ETF. I'll come to, I mean, probably like the major part of this ETF for sure is US equities, but there's like a European equities appreciation from the beginning of the year managed this chart to hold around here. But when you go to, for example, S&P 500 ETF here, or I mean, this is also a reflection of the like S&P index, exactly same, and a breakdown occurred, pulled back, and sell-off continued around here. Here there's a potential formation of like a double bottom kind of stuff, but still we're like below 200-day moving average. If I would trade this double bottom, for sure I will wait it to go a little bit higher, then maybe a little bit pull back. I would try to be long if I see any consolidation around, little consolidation around here, but still too early for me to trade this index. And when you go to this QQQ, it's kind of like a reflection of QQQ's reflection of NASDAQ index. So rectangle chart pattern formed. This was a trade idea that was given in Rationale newsletter service, and it worked out pretty well. Short idea, moved here, then pulled back, then moved here again, and it touched its like a rectangle chart pattern price target. When you go to weekly chart, as you can see, this trend line was also broken down. That's I mean, that's a bit concerning for me, since this trend is like broken down, plus we're down like a 200-day moving average. I mean, when I say like I'm being cautious, that what I'm trying to say is still, at least I haven't seen any signs of strength. That's why I'm saying to be being cautious. So the theme of today's video is like more like maybe being long in risk off instruments, or maybe sit and wait time. When you go to, for example, Russell 2000 ETF, if you go to weekly chart, For example, this rectangle chart pattern was another trade idea was given in rationale, and it reached its price target. Now it's pulling back, and as you can see, the price is trading around this old resistance and new support. I think these levels will be important, and rather than try to be long in S&P or NASDAQ, I might seek an opportunity in this chart as potential upside reversal might lead to form a cup with handle chart pattern formation, as you can see, like something like this. And that might, because that would also lead to lead the sector rotation theme to come back. And in that scenario, like a small cap stocks might have more room to go, and but still too early for me. As I mentioned, I want to see some consolidation, I want to see some rejection from bulls around here, so still waiting for this. But just like I would get this Russell ETF into my close watch list. European stocks, as you can see, the price got rejected from this ascending triangle chart pattern, moved really well. I think being long around here might be a good idea. A game plan like this with a tight stop here, because whenever, I mean, when would you put like a tight stop? If the market is choppy, then there's like a potential, bearish moves are so fast. In that scenario, you would like to be out as fast as possible if the price is not acting as you wish. So that's why I'm using more tight stops. I think this might be used as a good opportunity, as a pullback opportunity after a breakout. And DAX, as you can see, this huge, let's say, I don't know, this like a base broken out, pulled back and moved really well, and now it's like a consolidating, which is pretty normal. And you can also be long in European stocks, being like a long from support of this, let's say, flag, with like a tight stop again. Oh, sorry, my bad. Might use something like this. This might be a good game plan. And there's, as you can see, just to, if you can like let it go up until like the upper boundary of this flag, there's a 1 to 2 risk reward, 1 to 2.2, which is pretty good. And CAC France, as you can see here, same as you can see, all European indices have pulled back to its like old resistance, new support levels. And I think that might also be, I mean, if we see a potential reversal from here, we see a rejection from here, that would lead to form and head and shoulder continuation chart pattern, which would be also, that's why I would go maybe like as you can see in the daily chart, if I see a proper consolidation here, I would be long around here with a stop here. Then I'll wait to see a potential breakout from here. That's my current mentality on France 40 index. And in the weekly chart, let me go quickly. Seng index, China, it's pulling back to this like a huge rectangle chart patterns resistance right now. For the ones who were thinking that they missed the China ship, that might be an opportunity to be long around here. And this is emerging market index ETF. I'm just showing, just rather than trading this, I'm just showing this as an indicator. Because if there's an inflow to emerging markets, that means the risk on sentiment is coming back. As you can see, last 3 days there's a huge sell-off because risk of sentiment is pretty strong right now. I'm just suggesting this chart to use as an indicator to read what's going on in the market. Same here, high yield junk bond ETF. This is like when there's a high yield bond ETF, that means like it's more risky. As you can see, with the current risk off environment, there's a huge sell-off from here and it's broken down right now. And I think this might be a good opportunity also a good indicator to monitor the current situation, current market environment. what's, I mean, okay, I mean, everything is being like a sold off, but what do they buy? Like TIPS is inflation protected bonds, and this is the ETF of it. As you can see, there's a really nice head and shoulder bottom chart pattern is like formed here, and lately, as you can see, as people want to be just like with the risk off sentiment, with the risk aversion, they just want to protect themselves from inflation, and this move that leads that mentality led to this move happen, and a potential breakout might be an opportunity here. But also this is just as another indicator for you to follow where the money flows. And yeah, that's all I'm gonna talk about this week. These are the charts that I wanted to mention. Some of them might be used as a trade idea, some of them might be used as indicator, however you like, but just the current market environment is like a risk off sentiment is really strong right now. I highly suggest not to be like rush in any kind of trades, because when this kind of like a sell-off happens, generally it doesn't go just like I mean, there might be always like probability of being like doing like a V-shape action, but those V shapes generally, when this V shape happens, then after it's like corrects to like higher prices, then it gives like a little correction from the minor high, and I personally prefer to catch those correction from minor high, because I think it's still so risky to be aggressively long in current environment with the current uncertainties going on. So on Friday, non-farm payroll numbers coming, that will be pretty important, because markets seeking to see any kind of signal that gives some hints from like a growth side, which from like a hard data, which is like a non-farm payroll data. So any kind of signal from hard data like non-farm payroll will be pretty crucial. And I wish you a really nice week and good luck with your trades. Have a good one. Bye.